Does Beijing have a lot of options right now?
It has a lot of options in terms of it can stimulate the economy. Obviously, it hasn't gone into full-scale stimulus over the last year. So basically, it could go back to a bit like the old school practice of, stimulating the economy, more infrastructure investment, boosting the property market. So that's what it could do to get the domestic economy working. But obviously, how China works with the international markets is going to be a tough one as well. Obviously the currency, the foreign investment inflows have been a key part of keeping the whole economy stable. And it's things like that which now threaten it, rather than necessarily domestic issues.
Stephen Roach of Yale University and Catherine Mann at Citigroup both talk about the dysfunction and the codependency on the international markets between Beijing and Washington. How's that dysfunction going right now? I mean, the fact is they're wedded to each other with a trade deficit and a need for them to buy our paper, right?
Well, yes, but this is a relationship which has been fundamentally changing over the last 3 to 5 years. If you think, forex reserves effectively peaked in 2013. So the last 6 years, we've been in this sort of weird, some treasury has been sold down. You had 1 trillion being sold down. So basically, China's no longer, the net lender to the US market, and the US market is no longer pumping huge amounts of money into China. And this, in some ways, actually sort of underpins a lot of the change in the relationship, because instead of that mutual dependency, you're moving into on the monetary system, on the industrial system, you're moving into a much more competitive one, and this is why you get these tensions arising.
Miranda, if the trade war continues as it is, are projects going to be put on hold? Are we going to see a lot of capital outflows out of China?
Well, the thing is, you're already seeing foreign direct investment into China sort of slowing. It was flat on a dollar basis in April. But you've got sort of two counter. I think when it was only 10% tariffs, people think, OK, we could cope. We've had the currency depreciation. We can do some cost savings. But now it's gone to 25%. Then it's a categoric difference. And a lot of the companies are saying, in their results season, we're now thinking of moving outside China. I mean, obviously, the Vietnam, Thailand benefiting from that. And so decisions that were already being made about whether people wanted to stay in China because it's no longer so competitive to manufacture there, this is now a catalyst for them to readjust their manufacturing.
Miranda, we're also looking at renminbi. Is it going to touch 7? Is it almost a given? And what does it mean? Do you need to look at the pace of it touching at 7, or is just 7 going to freak the markets out?
Well, I think it's now becoming more of an expectation. It's a bit of a red line. But the thing is, what could happen is it goes through 7, then is stabilised at 7, so if you like, the psychological barrier has been broken, but you don't see an all-out collapse after that. It's then supported at a lower level. But yes, it seems, unless we get something over the weekend, you never know, there could be another tweet, then there could be a shift below 7, at least on the CNH, even if not on the CNY.